Welcome back to another video, investors. Today we're going to be going over 4 biotech companies that I think have pretty huge potential going into this year and in the future, okay? And here we have 2 stocks that I think are more risky, but also have the potential for higher reward, and 2 stocks that are more foundational and um, what even pays a dividend. Okay, so let's go over the risky assets first. And the first one is TYME Technologies. Ticker symbol is TYME, trades on the NASDAQ. As we can see, this is just a 6-month chart, and it's been blowing up by over 100% over this 6 months, although this is nothing compared to moves from, for example, like Genomics. Okay, so right now trading at $2.73. By all means, a penny stock sitting at 465 million market cap, and I consider anything under 2 billion market cap to be a penny stock, okay? So what is this biotech company? Well, first, it's an emerging biotech company focused on novel therapeutics designed to target cancer's unique metabolism. So it's advancing proprietary cancer metabolism-based therapies for difficult to treat cancers. I think this will be especially relevant once the pandemic subsides. So a lot of people right now are afraid to go to the hospital, okay, because everything is focused around the center of care for, of course, the virus. I don't know if I'm allowed to say it on here, but anyways, um, all the hospital efforts are focused on the pandemic and the virus, and a lot of people are not coming in with heart disease and with cancer when they normally would because they're afraid of going to the hospital. But once it subsides, I can see a leader for difficult to treat cancers that's targeting cancer's mechanisms of action and its metabolism to be even more important and relevant. Okay, so you can pause this and read their investor presentation, and is even talking about the fight against the pandemic, against the Roni-19. So again, it has many different opportunities, many different mechanisms that could lead this stock to even propel even further, even though it's received a lot of attention. Okay, and since its highs, it's still down about like 22%, so a little bit of a pullback, which could be a good opportunity to invest in TYME Technologies. By the way, I'm not sponsored by any of these companies, so I'm not getting paid to say any of these things, and I don't own any positions in any of these companies. The next one is actually a SPAC stock, and I mean, like, as we can see, even my previous portfolio, I made a video on that. The SPAC that I have, CCIV, that's proposed to merge with Lucid, is up by like over 100%. So it seems like SPACs only go up. Although this one has been going down from like $16.90 to $14.60 over the week, so down 13%. And this is another SPAC stock that's going to merge with 23andMe, which is a biotech company that's completing genome sequencing, I believe. So again, right now the SPAC is worth $943 million. And I think after the acquisition, the whole deal is going to be valued at around $3.5 billion. Okay, so let's focus on what is 23andMe. So it's going public via SPAC, and this is an article by the Motley Fool. And so this is consumer genetic testing, but it may not be profitable. That's what their thrust is. But they also have other avenues for revenue. Okay, so would you want to know if you were at high risk of developing a rare disease? What about knowing whether you're hereditary, I can't even pronounce that, predisposed to enjoying chocolate? With the power of DNA sequencing tech, all it takes is spitting into a tube to answer these equally important questions. You can't just spit into any old tube, of course. You'll need to use a sample collection vial from a genetic testing company like 23andMe. So again, it's merging with VG Acquisition Corporation. Merging with a SPAC is an alternative to an IPO. It's a much more efficient, more like rowdy method of going public. And let's see why people are into this stock. And we should look at like the 1-month chart, and it was like let's see the 1-year chart here. Of course, it was like $10 back in November, and now it's still up by 49%, but definitely a huge pullback from the $17.65 it was on December 4th, or it's February 4th. So 17% pullback here, so might be opportunity to invest. So again, its business model starts with the purchase of its at-home sample collection kit. You just spit into the tube, your saliva is ready to be mailed for your gene sequencing. And after you get your genome sequence, customers can report on their ancestry as well as a handful of health risk factors, et cetera, et cetera. Then they can select whether to allow the company to use their genetic code for research purposes, and around 80% of customers give the okay. This paves the way for future therapy development or hyper-personalized healthcare products. So this is the future of healthcare right here, right? Individualized healthcare based on a person's own bioinformatics. Okay, so this is really, really cool. Okay, but there are two problems. The first problem is that revenue from therapy development is at minimum years away. It takes a long time and a lot of resources to advance a drug from the lab to the end of the clinical trial process, and the company is only at the start of that journey. The second problem is that its consumer and research services business don't generate any earnings, and it isn't expected to until 2023. Okay, so management predicts that revenue will shrink from 305 million to 218 million by the end of 2021. Okay, so this could be a problem for the share price of VGAC and, of course, after the merger. However, its real value is in the trove of genetic data, which isn't going anywhere. Its database has a genomes of nearly 10 million people, making it the largest of its kind by far. In 2018, GlaxoSmithKline signed a 4-year research and development collaboration deal worth an investment of 300 million to get access to the data, seeking new targets for drug discovery. As part of the deal, the two embarked on a 30 joint development program where profits and expenses would be equally shared. And so with the capital from the merger, 23andMe could advance several of these programs closer to bearing revenue, but investors should expect it to form more R&D deals with pharma giants moving forward too. So again, this is more of a risky play. It's doing something really incredible, and because it has a ton load of data, genetic data from 10 million people, this could poise it as one of the better companies to take advantage of all this data. Because right now, when you're sitting on data, data is basically money. Okay, we learned that from big tech companies, Google, Facebook. They have a ton load of data, and once you have a lot of data, then it's easier to figure out how to sort of monetize that data. Okay, and of course, in the age where a lot of people, of course, are entitled and should be entitled to their data, we'll see what actually happens in terms of who's allowed to access that data and what they're allowed to use that data for. For example, if they can sell it to insurance companies, that could be a major scandal. So you got to be careful, but this is a pretty interesting SPAC, and I like this pullback of 17%, so I might consider adding a small position in this one, okay? Next one is a larger $11 billion company called CRISPR Therapeutics, right now trading at $161. If you're looking at the year chart, it's up by 177%. So if you invested in this company a year ago, you would have been looking really nice right about now. Okay, so it focuses on CRISPR method, which stands for clustered, regularly interspaced short palindromic repeats, which are the hallmark of a bacterial defense system that forms the basis of CRISPR-Cas9 genome editing technology. So right there, it's a genome editing technology. So if you have a disease, you know the gene sequence that causes the disease, and you know what the normal gene sequence is, then you can pretty much cut out the defective gene sequence and put in the healthy gene sequence in all your cells, and therefore, voila, you have a healthy body, which is the underlying premise of CRISPR-Cas9. Okay, so again, their vision is creating transformative gene-based medicines for serious diseases. Okay, and again, some of their highlights here: advancing CRISPR in the clinic, so gene editing with CTX001 in beta thalassemia and sickle cell disease. So these are red blood cell diseases, which are very, very prevalent in African countries because it prevents conditions like malaria, okay, but it still is a pretty serious condition, okay. So next gen immuno-oncology platform, that just means against cancer platform, again with best in class gene editing cell therapies, okay. And these two here, you can talk about it. So it's a specific, efficient, versatile tool for editing genes. So this has a range of solutions, and I actually like the CRISPR-Cas approach than these other gene editing or biotech softwares, because this is, again, specific, efficient, and versatile. So again, you have a defective gene, you take out that gene, and you insert the healthy gene. That's the basis of it. Okay, and this is from Science, which is one of the highest impact factor journals. If scientists can dream of a genetic manipulation, CRISPR can now make it happen. So really, really cool stuff. The only thing is that this type of stock, I'm a little concerned with their whole revenue here. You can see here they earned like 77 million in fourth quarter of 2019, but then they lost money from first quarter of 2020 all through third quarter of 2020, where they lost 92 million in third quarter of 2020. Okay, so I'm kind of concerned with that, and I haven't looked into that into more detail, but definitely I'll be looking into that a little bit more later if I decide to invest in a company like this. That's especially valued at $12.1 billion, but it's losing money like crazy. Okay, so I'll have to look into that a little bit more. And it does not pay a dividend. All right, and the next one is probably the most boring of all, but probably the most safest of all is Pfizer. Okay, you might know Pfizer from the Pfizer BioNTech vaccine, and not only does it develop drugs, but it has a plethora of other products. And we can see on the year, it's actually like pretty volatile stock. And on the year, it's only up by like 0.9%. Okay, so there was a huge run up, of course, because retail traders flocked to the stock based on they were like one of the first companies to develop a Roni vaccine, so it shot up by quite a bit. Especially when we were talking about like the March lows all the way to the highs in uh, December, it shot up by 54%, but now it's back down by 18%. So this recent pullback may be a good buying opportunity. It actually has a nice dividend of 4.49% and is a massive company, $193 billion. Okay, so right now I would probably feel the most confident investing in Pfizer, and I'm really liking this nice pullback in Pfizer. And of course, like if you want to pause this video, and you can pause here, and it talks about some of their other products, of course, other than the Roni vaccine. Okay, and let's just look at a little bit more of their earnings. And Yahoo Finance has better stats generally. So again, 4.49% dividend yield. They actually beat expectations on earnings for the past 3 quarters, but they actually missed in fourth quarter 2020. So that's what's probably dragging the stock price down. Okay, and of course, a lot of retail investors are pulling out of Pfizer after hopefully earning on the hype on Pfizer. Okay, we can see, of course, their past annual revenue. In 2020, their latest revenue, they had 9.6 billion in earnings against a revenue of close to 42 billion. And in the fourth quarter of 2020, they only earned 594 million dollars, but at least they're in the positive. Okay, so again, this is an established company, and if you're risk averse, definitely think about investing in Pfizer and maybe CRISPR. But if you want potentially huge returns, look at TYME stock. Okay, only like 465 million and VGAC, which is going to merge with 23andMe. Okay, so my favorite, I want to say Pfizer is looking pretty nice, as is TYME. Okay, so maybe I'll invest in the combination of the two. Okay, but let me know what your thoughts are on these four biotech companies. Let me know if you have any more biotech stocks that you'd like me to check out in the comments below. As always, please be sure to like and subscribe if you haven't already. Take care, see you next time, and of course, happy Valentine's Day. I love you all. Peace.